lost money this week in the market? Do you have market correction protection? Going to break down kind of what's been happening so far in April. Also, different strategies you could use to protect yourself against something if you have this kind of event happen again. You want to make sure you have diversified portfolios, market correction protection in case something like this happens. So we're going to dive right into it, ladies and gents. Just here to drop a few cents. You're with Earl, the money coach, with a decade license in the financial profession and also 2 decades of an investment portfolio background. I've seen this happen many times, so I really want to break it down. I have my handy dandy laptop here. I want to give everyone the most accurate statistics and also a breakdown of what all that means. So let's get started. A lot of you guys know it's been a horrible, horrible week. It's been the worst week since 2020 when it comes to having a drop in the market, going from it's been an all-time highs to almost on the cusp of a bear market. A bear market is generally when you see stuff go down overall 20%. That's when the bear market starts to kick in. So not everything has. A couple stocks have hit those kind of amounts, but I want to kind of break it down and also what you can do. So make sure that you guys like, follow, and subscribe, and click below so you could get yourself some HSA, health savings accounts, insurances, different strategies, and for my business owners, you could qualify for six-figure loans automatically. Look in that description. But let's give some of the stats. Number one, what's going on just this week from April, pretty much the first week of April, from the 31st all the way to April 4th, which is today. What's really happened? Well, this week has been the worst performance since the 2020 COVID crash. Some of you may remember that when in March 2020, the market dropped 30% in that 1 month. So it was a huge drop, a lot of pandemonium, a lot of chaos, a lot of folks didn't know what's going on, how to be able to capitalize. But the NASDAQ is down over 20% from its December peak, officially entering the bear market. So the NASDAQ has hit that. Now, the Dow Jones fell over 2,200 points on Friday alone, wiping out trillions of value. So we've seen it happen certain areas. Now, the NASDAQ, remember, for those that don't know, it primarily focuses on a lot of the tech, the tech industry, a lot of tech companies, and that's the big field. So when the tech companies take a huge hit, you could expect to see the NASDAQ to be down. But it's been, like it shows here, a 2-day bloodbath. The total market value loss from Thursday and Friday, April 3rd, April 2nd and April 3rd, was 6.4 trillion in just 2 trading sessions. Thursday, April 3rd, the Nasdaq went down 6%, S&P 500 went down 4.8%, the Dow Jones was down 3.9%, and then today, Friday, April 4th, the Dow dropped another 2,200 points. So we're seeing a lot. You see the numbers. We're seeing a lot of drops. Now, some people have capitalized. For the option traders, for those that don't know, you could do puts, you could do calls when you do your options. Now, a call is you're calling for it pretty much to go up, or you could do a put option where you're betting on the market to go down. So a few of my things that I've actually profited while the market's down in some areas. I've been doing put options and pretty much gambling on it to continue to drop, so I'm be able to profit. I've been able to profit on some of those. Not saying it's for everyone, not saying it's something to counteract it all, but you do have options out there. Now, the big thing is, why is this hitting? The main reason why is because love him or hate him, not going to get political. Donald Trump had his tariffs. And since he's initiated some of these tariffs, it's very volatile, a lot of uncertainty in the market. What's going to happen? A lot of folks are starting to panic, all those kind of things. So let's go right here. The tariff plan details, which were announced on April 2nd. So the main details are announced this week in April, and automatically, boom, we're starting to see hits. So 10% tariffs on all imports, 34% tariffs on goods from China, 46% tariffs on Vietnamese goods. All that's going to be effective April 9th. So pretty much next week, a lot of these things are going to kick in. So you saw that, but what happens is retaliation. We hit China with 34% tariffs. They retaliated right back with 34% tariffs starting April 10th. So we hit them on Wednesday, they're going to hit us back on Thursday. So that is huge. So a lot of these countries are starting to retaliate and have their own tariffs, which is causing a lot of volatility in the market. Now, the impact, obviously, your tech, your Apple, your Nvidia, your AMDs, you're seeing a lot of these sharp declines and a lot of this stuff JP Morgan and some of these places, some of these banks are over, they're down 6, 7%. So you're seeing a lot of certain sectors to start to get hurt. Now, this is what we call a systemic risk or a non systemic risk. Uh, Let me break it down first off. What is that? A systemic risk and a non-systemic risk could mean pretty much what could happen for a certain company or a whole area. So a non-systemic will be if you hear a certain company is taking a hit, area tech might be taking a hit, that could be a risk for that company. So that company could get wiped out, something like that. When you have a systemic risk, that's when the whole market, so not just one area, all the sectors start to get affected. So we can be getting towards that territory in the next couple of weeks or maybe even a few months. Who knows? I'm not here to predict. I want to give the facts for you right now, and then ultimately be able to show you some ways you can have that correction protection. So financials, we know industry retailers have also took major hits. Now, why is this alarming? I'm reading it right here. Obviously, we know since the crash for COVID hit, it's the biggest thing since that. But it's the volatility spiking. All right. You have the CBOE, the volatility index, VIX, all right? CBOE volatility index. VIX surged to its highest level since April 2020, a signal of investor panic. So this index pretty much it shows what people are thinking, how they're panicking, how they're reacting, and people are quick to dump stuff, all that. It's been the highest since 2020. So a lot of people are uncertain. Some folks are trying to cut their losses. People are trying to consolidate. It causes a lot of a ripple effects. You start seeing people talk, look on social media. You got gurus talking about 401ks getting hit and this getting hit, what you should do. But you got to understand how to read all this stuff. Now, the big fear is stagflation, like they're talking about. Do they have any numbers here? Higher tariffs could increase consumer prices. We know that inflation. But this could also be economic stagflation risk, and that could be huge for folks. So you really want to look into that. Obviously, investor panic is happening. They don't know the bond yields have been dropping as investors rush to safety. Remember bond. For those that don't know, bond is a fancy way of saying a loan. So when you hear about bonds, like a government bonds, municipal bonds, or a city bonds, that means they're taking a loan. Government loans, city loans, a lot of that for safety, is good. But when that starts to fluctuate and so much people go towards that, it actually could be a bad thing. So a lot of these things are happening right now. They're saying that administration is unapologetic right now, saying that this is the path to reclaim industrial dominance. Now, this is huge. The key is when we're talking about all this is a lot of folks are focusing on why Trump is doing this. His goal and his motive is to bring a lot of stuff back to America, bring a lot of the industries and a lot of the stuff that we've actually outsourced back here to create jobs and actually have stuff made in America. So that's the main focus for doing all this and what the tariffs are going to do. So there actually has been literally companies talking about spending $400 or $500 million bringing stuff back to the states. So a lot of people talked about it. Are they going to do it? We don't know. So a lot of folks are saying, hey, if this is the case, we're going to have to bring stuff back. So it actually can work. But unfortunately, it may be a long term goal. You got these companies, you're not going to have a whole manufacturing plant for, say, cars. Say, if you try to bring cars back here, you got to get the workers, you got to get the plants, you got to get the assembly lines. That's going to take years to even be able to get up to speed. So even though Trump wants to do this right now, it's still going to be a long term before it actually starts to kick in, or we could actually see the reap the benefits. So on the short term, we're seeing a lot of volatility, which brings me up to having market correction protection, MCP. One of the things I talk, most of my clients, I say about 95, 96% of my clients have not lost money this year because they have MCP. They have that market correction protection. They have money in accounts where you have an index, which means for some accounts, you have a cap and you have a floor. Now, how does that look? You have a cap if the market goes up, say 30%, but that company, that cap for that strategy is 15%, that's all you're going to get. But the floor is zero. Zero is your hero. Once you have that floor for a lot of these index accounts, you're not worried if the market's going to actually take a hit because your money's locked in. Because a lot of these index accounts, they're reflecting the market, they're not officially in the market. So when the market goes up, your account gets to go up. Two of the greatest ones for that is your fixed index annuities and your index universal life insurances. Long story short, Index annuities, that could be for large lump sums. You got 100,000 you want to put into an account, 200,000, move a 401k, you have money in your bank, one time large lump sum, that's where your fixed index annuities come in. Your insurance comes as a saving strategy where you can start putting money in eventually over time. You're putting 400, 500, $600 a month, and that's able to grow within these index accounts. But the main thing is a floor. So across the board, I'm a broker, so I work with over 50 companies. None of my clients that have annuities or have insurances that are indexed have lost funds. Now, I do have clients who may have Roth IRAs and different kind of accounts. They're experiencing that market volatility. So it's super important to make sure that you have your portfolio diversified so some of your investments is in index strategies so you're not worried about it. Now, a great thing is you could do rollovers. You could do strategic rollovers if you want to move your money. If you've been taking a hit and saying a 401k, your IRAs, different kind of accounts, you can roll those accounts into actual fixed index annuities. So understand doing that, you could actually eliminate having that loss and also have something gaining tax advantage benefits for retirement purposes. And that, folks, is huge. So I tell people all the time, listen, make sure some of your portfolio has market correction protection. If it's insurance, if it's annuities, if it's something where you have where you're not worried about taking a hit, that's huge because when you have hits where people lose money like right now, it could start a ripple effect. So think about it. Today's Friday. This news came out on the start of April. April 1st, April 2nd, you heard a lot of this news. April 3rd, April 4th, you're starting to see a lot of market volatility. A lot of people right now, they're not even talking about it. You talk to some of your coworkers, they might not even know what's happening. So by the time people start to realize a lot of this stuff is happening, the market could take a bigger drop. We don't know. So now's the time to start planning. If you want to strategically move money around, have something in an index account. I always say that's a great way to have market correction protection because you don't have to worry when certain things and certain events like today happen when you have the worst couple days in years, you don't know what's going to happen to your funds. Well, look, at least a portion of your portfolio is good to go where you're not working, where you're not worrying, I should say. So, folks, just wanted to drop that. It's really important to understand having MCP, market correction protection, on part of your portfolio. There's different strategies. You could watch some of my other videos breaking down your insurances and your annuities and how to use them so you get that correction protection, folks. And if this was a great information for you, make sure that you click on the link, follow everything that I have, like, follow, subscribe, and look for the description so you can see a few things that could actually help you guys out. And I'll see you on the next video. Take care.